All down. All silent. Going. Go. So congratulations.
Welcome to the Current Market Insights podcast, brought to you by Harris Partners Real Estate. Each episode, we chat with real estate author and industry leader Peter O'Malley to discuss the current property market conditions and provide insights to assist you on your property journey.
Hello and welcome to another edition of Current Market Insights. With you, as always, your host Kieran O'Brien, and with me, our good friend Mr. Peter O'Malley. Peter, hello.
G'day, Kieran. Great to see you.
Great to see you, Peter. It's been a little while since we spoke. You have been away and we've had a bit of a break from the podcast, and I thought there's a good chance to catch up today, get a sense of what's actually happening in the market. I know you're back on the ground now, so I thought we might start today, Peter, with a sense of what you're seeing out there at the moment and I guess in some ways how it compares to before you went away.
Yeah, interesting developments out there, Kieran. Stock on market at the moment is really, really low, but all of the leading indicators as to what is coming with stock levels are suggesting it's about to jump very sharply. So we'll see if that follows through. But my feedback from speaking to lawyers who prepare contracts on behalf of vendors, stylists, other agents in the industry, other agents in our office, clients that I'm speaking with, they all give me the same impression that there's a lot of listings that will be coming to market as we head towards spring. Now, if you go on Domain or realestate.com, you certainly won't see that message. What's interesting at the moment is the properties that are selling have sold for good prices. There's no doubt about that. But there's an increasing number of properties that are hanging around longer or not achieving a sale. So there's really contradictory messages out there at the moment, where on the one hand, stock's really low, but everything's suggesting it's about to rapidly increase. Number of sales is down, but those properties that are selling are achieving good prices. So not an easy market to read for the consumer.
So you mentioned some indicators that things are about to increase. What are some of those indicators that are telling you there is stock coming? Is that are you suggesting it's clients saying, "Hey, look, we are going to come to market," and vendors saying,
emphatically,
yeah, okay,
emphatically, and that's just not me. Everyone I speak to that's in the industry or related to the industry, like stylists and lawyers who prepare contracts, are saying that after a really quiet June. One stylist phrased it today that I was fiddling my thumbs in June, and then suddenly everything's taken off as people are gearing up for the spring market, and that parallels with what we're seeing both internally here at Harris Partners and what we're hearing more broadly.
Okay, so we've talked in the past a lot about how the real estate market is cyclical and spring is usually a busy period. You also mentioned that stylists and other trusted partners, I guess, have mentioned it's a bit slower this June and July than previously. How would you say the stock levels compare this year, not necessarily with just last year, but in terms of general trends? Do you think this is
they're down on last winter. So I'm not sure if you remember, but last winter we received a rate hike and that pushed stock onto the market at an unusual time of year. So most agents reported elevated stock levels last winter, where if I look at SQM Research's numbers, they're suggesting that stock levels are well down in Sydney this winter, but I think that is about to change. Getting a sense of the sentiment or the vibe amongst prospective vendors, a lot of people have a firm eye on what the RBA do in early August with rates. I think a rate hike is going to be a blow for many households if it does land. And it's really contradictory messaging and forecasting and views from pundits as to what the RBA will do in August. Nobody's suggesting that they're going to cut realistically in August, but a lot of people think that they will stare down the pressure of having to hike rates and stay on hold.
So just to give me that point for a minute, you mentioned obviously the rate hike last year brought a lot of people to market that may not have otherwise done so, and this year is slow. I just really want to get a sense for our listeners. Do you think it's uncharacteristically slow at the moment, not just compared to last year, which was a bit of an anomaly, but if you were to say, look at the 10-year trend, does it feel like a quiet winter period for you, or does it feel like about the same, but we've come off a weird 2 or 3 years with stock levels fluctuating pretty heavily?
What is normal since COVID? Since COVID, this is, I think, it's been a tight stock level. but it's changing quickly.
Okay,
So we've listed a number of properties, for example, really good properties that will come to market in the next month that are not on our website yet. And if you look on our website, you would think that we've got average stock levels, but it's about to expand somewhat quickly.
Okay, and for the stock that is on the market at the moment, how is your team, yourself, how are your vendors dealing with this weird time? You know, are they realistic of what's happening in the market? Are they, suspecting that maybe the RBA's decisions are impacting what buyer sentiment may be like and that vibe that you mentioned? Or are vendors pretty realistic and they're just sort of working with what's around to still try and get a sale?
Every campaign takes its own path at the moment. So we've got some listings that, there's one listing in Birchgrove, for example, where it's had over 250 inquiries in 2 weeks of marketing.
Yeah, wow.
97 heads through the door, 97 parties through the door in those 2 weeks. So that's a really positive response. And then we've got other properties that we think are, primed and priced to sell, and they will sell, but it's a bigger arm wrestle than we anticipated. So to manage expectations with our clients, we're saying that every campaign takes its own path, and we need to go to market, run a good campaign, and then deal with the response, good, bad, or indifferent, that comes back. And, you play the market based on the response it gives you, and that's different for each campaign.
Yeah, that's really fair. I'm interested, Peter, to get an idea of how Australia's property market at the moment compares to where you've been. I know you've been over in Europe, a couple of countries, I think, and I know you've certainly been in the UK for a little bit, which has, in many ways often been compared to Australia in terms of housing. I'm interested to get a sense of what you feel their market conditions look like. Are they facing similar problems in your eyes? And can the average Brit or the average European get up every day thinking of the same things that we kind of do in property?
By and large, yes, Kieran. We think in Australia that we're dealing with domestic challenges, but if you do look further afield, these trend lines are fairly global. And even during COVID, the way we reacted here in Australia with work from home, people leaving the big cities and heading to the regions for lifestyle and working remotely, well, that was a global trend. Office space being under pressure because more people are working from home and office space dropping sharply in value is a global trend. So the things that I identified when I was in Europe recently, I think are very parallel to what we're seeing here in Australia. The rich are getting richer. That was a very distinct message that I picked up in speaking to people in the UK, is that the inflationary pressures and the rising interest rates are not impacting on what you might call the top end of town as such, but the middle class and down, lower socio-economic areas are really under pressure at the moment and feeling the pain of these rising rates. Their markets are a little bit further down the track in the inflation battle than what we are, and they are, I think, cutting rates in Europe and expecting rates to be cut in the UK in the very near future. So they're starting to see some relief. That was kind of interesting, because when you go to cost of living, I like to do things anecdotal, like go to supermarkets and cross-check pricing of the basics and just get a sense of things. And I didn't get any sense that inflation was under control or costs were under control in Europe. It was more expensive than Sydney. So I was in, I didn't go to London, bypassed London. So I was in northern England, then down in Cornwall, across in Berlin, spent a couple of days in Dublin. And the basics in all of those locations felt more expensive than what Sydney does, keeping in mind that Sydney's probably the most expensive part of Australia for the basics as well. Another interesting point is that when I look at the price of real estate in those cities, Berlin and down on the coast there in Cornwall, I do not look at the prices of real estate in those locations and think that Australian real estate is expensive.
Yeah, right.
So we are constantly told how expensive and how outrageous property prices are here in Australia. But as I say, that does not tie in with what I saw on the ground in Europe.
I wonder, though, I've heard this argument before, and you look at some key cities, certain parts of London, New York, or Denmark, for example, it's incredibly unaffordable to live within the city district. Now, I assume, or would I be right in assuming that when you say prices in Berlin, for example, we're talking about a global city that's probably a little bit more developed in terms of its infrastructure than Sydney, and that prices are particularly expensive in those central hubs?
Let me go to developed infrastructure. We went to one of the Euro games,
Right.
75,000 people.
Mm-hmm.
It's about 6 or 7 kilometres out of town.
Right.
Yeah. We could not get on a train, an Uber, or a taxi at 11:30 at night to get back to our hotel because there's a lack of infrastructure. It's oldie world infrastructure. And after a day of sightseeing and then going to the football at 11:30 at night, myself and Reggie, my 13-year-old son, had to walk the 6-7 kilometres home through the back streets of Berlin
Yeah, right.
because you couldn't get anything. The Uber app was jammed, no taxis, lights off, all full. Every time we'd go into an underground to try and get on a train, it was packed to the rafters. So I wouldn't be saying that Berlin's got superior infrastructure to Sydney.
Okay. Well, let me rephrase then. Would it be accurate to say that the prices within the sort of central hub of Berlin is more expensive? Would you see
It was about on par.
It's about on par? Okay.
Yeah.
Do
Now-
you see the same breadth of city though? As in, do the costs expand as far out as they do here in Sydney?
Look, I didn't go that deep. In fairness, keeping in mind that's running on the euro, so I'm looking at apartments on the euro, and they were priced marginally lower in euros than what a similar apartment would be priced at here in a good part of Sydney
Yep.
in Australian dollars. But keeping in mind that the Australian dollar against the euro is well down.
Yeah.
So I was looking at it going, well, if you get this onto parity, these are not substantially cheaper properties than what they are in Australia. And the media here in Australia love finding a chateau in France in the middle of nowhere and saying, look what you can buy in France for 1.4 million Aussie versus what you get for $1.4 million in Sydney. But it's not really a like for like, because if it's in the middle of nowhere, unless you want to live as a hermit, what good's the chateau?
I must admit, I do love when those articles come through, Peter. I always think to myself, I could have a chateau.
Yes.
One day. One day. Look, as we sort of wrap up then on your Euro trip in 2024, I wonder, just a final thought then, given that Europe's gone through a massive flux politically, there's heaps and heaps of elections going on, there's heaps of changes. Have you seen any or read any messaging over there that is related to housing? Is that on the agenda in Europe like it is here?
Well, down in Cornwall where I was, the locals' big gripe is the rich people. So that's probably the equivalent of their Byron Bay.
Yep.
Great surfing area.
Great pasties.
Yep, indeed. Good clotted cream in Cornwall, rest assured. But the locals' massive gripe down there is the rich from London coming down, buying holiday houses, using those holiday houses for 3-4 weeks a year, maybe a bit more, not putting them back to the rental market, and the locals have got nowhere to live, the true locals in Cornwall, and it's driving rents up.
Yep.
So this inequality gap that we've touched on for the last couple of years, as I say, it's a global issue, and that's probably why the re-elected government in France are looking at higher taxation, because as we've alluded to in the past, governments have a massive job to rebalance the wealth inequality that's occurring at the moment, because it's a playground for the rich and it's pretty tough for everyone else.
Yeah, certainly. I'm not surprised it is a global issue, and that it sounds horrible. I know that's a big issue in Byron. It's certainly not the only place in New South Wales alone where lots of, the top 10% are purchasing weekenders and not using them for everyone else.
Yeah.
Real shame.
So we stopped in at Dubai for a while there, and that was interesting because obviously they don't have 3 levels of government that they've got to get aligned to get a block of apartments built. Far from it, very flat decision making there in Dubai, and apartments are going up to deal with all of the same issues: lack of housing, excess population demand. Apartments are going up faster than you can imagine in Dubai at the moment. So,
And mate, they are advertising a storm. I get not emails necessarily, but I get social media ads. I get all kinds of campaigning at the moment, trying to sell places in Dubai in particular. to foreigners, expats, etc. So there's obviously, they're trying to build up a massive community and populate it with the world's wealth and intelligence and try and create a new hub through the Middle East.
Oh, they are. And look, they're doing well, but inflation, I don't know what their monetary policy is there, but inflation is out of control.
Yeah, right.
Absolutely out of control. You go to those shopping malls and the small guy, the taxi driver, with respect to taxi drivers, his rates are cheaper than Australia. And then you go into the mall and a pair of sneakers that might cost $180 in Australia cost $280 there. I went into a Xenia store, a tie that cost $280 here in Australia costs $550 in Dubai. The same tie, necktie.
Yeah.
Yeah, so and as I say, in their major shopping malls, it's like, well, who can afford this other than the sheik himself?
Well, I think that's the problem. When there's so much wealth means nothing, right?
Yes.
It does. It's a great equaliser. Well, look, let's come back a little bit local as we try and wrap up tonight then, Peter. We'll keep it short. Give us a sense of what's happening in the market over the last week or so.
Well, look, yeah, I was detached, obviously, whilst I was away, but just wanting to keep an eye on things. And something just popped out, Kieran. There's what I'm now calling, there's the Saturday night clearance rate and the Tuesday night clearance rate.
Right.
And the Saturday night clearance rate is the clearance rate that real estate agents wants consumers to hear and believe. And the Tuesday night clearance rate is the market reality. And I was seeing things while I was away because I was, as I say, looking to just grab tidbits just to stay in touch with what was happening here back home. And I was seeing on Saturday night, the consumer was being told the auction clearance rate on one of the weekends was 68%. And then when the Tuesday night clearance rate came through, it was at 49%. The weekend just gone, for example, the media companies were reporting a 65% clearance rate on 580 auctions. And then the Tuesday night clearance rate from SQM Research, which captures not just some auctions but all of them, had the clearance rate at 48%, 48.9%. So a really big spread has formed there, and the way agents create that spread is hold back properties that don't sell, of course, and try and keep them out of the reporting period. Yeah.
So we mentioned right at the start of the podcast that it's a particularly low stock period. Was that reflected across the auction numbers for the week?
Yeah, they're down. 583 auctions last Saturday, 803 for the week. This week's auction clearance for Saturday, the 20th of July, is 853 auctions. That's back to about average, keeping in mind, is this the last weekend of the school holidays?
Yeah, I think it is.
Yeah, so school's back next week.
I think so.
Yeah. So that'll help, and that'll give us greater clarity as to where the market is in terms of stock levels when everything's back to normal and school holidays are over. But I suspect, the sense I have, that weekly auction clearance numbers will climb back above 1,000 before the spring, i.e. in early to mid-August.
Yeah, it seems not that long ago we were talking about 12, 14, 1,600 properties going to auction on a weekend.
They were the autumn numbers as people were looking to avoid the winter sale. But it's not weather-wise. It's feeling like a fairly long winter here, or a genuine winter in Sydney. But in terms of the property market, it's been a very short winter where stock has pulled back sharply. But as discussed tonight, there's a real sense there's stock coming.
Well, just as we wrap up tonight then, Peter, I know Louis Christopher has mentioned before that when the auction clearance rate hits below 50%, repeatedly, it can be a sign that there is some stress in the market. Are you just thinking back on the numbers that we've seen recently? Do you think there's a bit of a trend forming in terms of clearance rate, with that 48% coming through?
So 2 of the last 3 weeks have seen the auction clearance rate drop below 50%.
Okay.
Of those that only just their high 40s, thankfully, of those properties that are selling, you can't look at many of those sales and say there's weakness in the price there. So I'm not seeing the same absolute enthusiasm at the top end that we were seeing, say, 3 to 6 months ago. That does seem tempered somewhat, but you'd still rather have a more expensive property to sell from a market condition perspective than a mainstream property. But yes, Louis does say quite decisively that sub 50% suggests that vendors will need to start conceding on price to get a sale. and 2 of the last 3 weekends have seen clearance rate drop below 50% on really low stock levels.
Yeah, it's a certainly cause for concern, but not cause enough yet to panic. We'll have to see how things pan out. As always, Peter, look, a really great recap today. And, from myself and all of our listeners, welcome back to Australia and welcome back to the podcast.
Thanks, Kieran.
And thanks to everyone for listening to Current Market Insights. We look forward to speaking with you next time.
Thanks for joining us on the Current Market Insights podcast, brought to you by Harris Partners Real Estate, the podcast providing real estate insights you won't find anywhere else.